Global gold demand increased by 34% first quarter of 2022. Could inflation and recession fears be leading causes for the surge? You might recall that CPI reached 8.5% in March, the highest in over 40 years. In articles and interviews around that time, experts anticipated that the April numbers would be considerably better, but they weren't. Inflation barreled ahead at 8.3% in April from a year ago, remaining near 40-year highs. At 8.3%, the improvement, if you can call it that, is too little to be significant. And core CPI, which excludes volatile food and energy prices, increased last month, rising to 6.5% from March's 6% figure. If you've been doing any shopping in the last year, you likely know that inflation has been a problem. You also probably know geopolitical tensions are high since Russia invaded Ukraine. What you may not know is the degree to which all of this uncertainty has been energizing the buying of physical gold. The World Gold Council has released its Gold Demand Trends Report for the first quarter of 2022, and the numbers suggest that people looking to hedge their financial holdings put a great deal of faith in gold to do just that. The report shows that demand for physical gold in Q1 2022 increased 34% year over year to 1,234 metric tons. It's the highest demand for gold in a calendar quarter since 2018. The report also shows an improvement over the 5-year average for quarterly gold demand by nearly 20%. And central banks added 84 metric tons to their reserves. That's more than double the quantity of gold they purchased in the last quarter of 2021. And in a Fortune article about the Q1 gold wave, an advisor to Australia's Perth Mint suggested that this demand is likely to continue because of what's going on in the world and our economy right now. There will be more demand for gold as a safe haven as long as the world is in disarray and as long as the war is raging in Ukraine. Until the Fed can really get their arms around inflation, gold demand as a hedge should be there. Let's say the central banks are successful at reducing inflation. Will that indicate the end of the current gold demand? Maybe as an inflation hedge, but 8 of the last 11 rate tightening cycles have ended in recession. That raises the question, what if inflation is replaced by recession? Could significant gold demand persist as a hedge against recession? The same Fortune article I just mentioned reinforces the idea that gold tends to perform well during recessions. The last U.S. recession of significant length occurred against the backdrop of the global financial crisis of the early 2000s and, by most accounts, lasted from December 2007 through June 2009. Gold appreciated 20% during that period, but fallout from the financial crisis lasted for years, and gold continued to strengthen. For example, in the 4-year period from December 2007 through November 2011, gold appreciated 120%. As gold continued to march upward in 2011, Ben Bernanke, Federal Reserve Chairman at the time, said the following: "The reason people hold gold is as a protection against what we call tail risk. Really, really bad outcomes. And to the extent that the last few years have made people more worried about the potential of a major crisis, then they have gold as a protection. Will we continue to see strong gold buying reports? Gold has a reputation for being both an inflation hedge and a hedge against a variety of economic downturns, which makes it reasonable to believe that the interest in the yellow metal could persist. That's why I invite you to join a one-on-one web conference with me and my education team at augustapreciousmetals.com/webconference.
Hey guys, Joe Montana here with my man Devlin Steele. He and his team at Augusta Precious Metals are constantly putting out new information to keep you ahead of the game. Click subscribe now and hit the notification bell to stay up to date. You'll be glad you did.